Hi, I'm Jim Smith.
And I'm Martin Fox, and welcome to our end-of-year investment briefing.
As we approach the end of 2024, we thought it would be a good time to reflect on the events that have shaped markets over the past 11 months, look at the returns over the year to date, and what we might expect to see in 2025.
At this time last year, when 2023 was coming to a close, we were seeing signs that inflation had started to fall and that interest rates may have peaked. By historical comparisons, markets looked fairly priced, but there remained some geopolitical uncertainties. Two major conflicts in Ukraine and in the Middle East were ongoing, and there was growing tensions between the US and China. So how did things in 2024 turn out?
Well, despite a few ups and downs, markets moved ahead strongly, led by gains in the US and other parts of the world catching up later in 2024. This resulted in double-digit returns for investors so far this year. As the year has progressed, inflation did come down quite quickly, and central banks were able to kickstart their rate reduction cycles earlier than initially predicted, with interest rates currently on a path to much more accommodating levels. The US outperformed most expectations as industrial capacity was brought back to the US, and they continue to lead in technological sectors such as AI. In other parts of the world, growth was slower. Many developed countries were feeling the effects of higher interest rates and a changing demographic, with fewer workers and a higher number of retirees. New Zealand fell into recession at the start of the year and has been there pretty much since, as it has struggled to return to growth.
But whilst the domestic economy has been weaker than expected, there has been some positive news from inflation and interest rates. After reaching a high of 5.5% in the middle of 2022, interest rates were cut sooner than expected in August this year. Rates have since been reduced a total of 3 times and are currently sitting at 4.25%, with the prospect of further cuts in 2025. Inflation, which briefly shot up above 7% in late 2022, has been steadily falling and has now come back down to 2.2% at the last quarterly reading, which is within the Reserve Bank's target range of between 1% and 3%.
In terms of investment returns, markets have delivered strong returns so far in 2024. From the start of January to the end of November 2024, in New Zealand dollar terms, the S&P 500 index, which represents the 500 largest companies in the US, was up 36.6%. Australian shares also had a good year and were up 17.5%. The MSCI World ex-US Index, which is a broader measure of stock market performance of developed markets outside the US, rose 14.8%. Here in New Zealand, the stock market was a bit slower to get started, but has now risen 11.8%, whereas New Zealand bonds have returned 5.8%.
So with investment returns in 2024 turning out better than many had expected, what could be in store for 2025?
With lower inflation and interest rates, we should finally see growth return to the New Zealand economy after a challenging 12 months.
In the US, following a clear win for Donald Trump, he has promised to raise tariffs on a range of goods, which could ignite a trade war and raise geopolitical tensions. Although there are some signs that the wars in Ukraine and the Middle East may come to an end in 2025.
From an economic perspective, the US is set to continue to grow, albeit at a slower pace than in 2024, and we could see growth in many other developed economies. But China's days of rapid growth seem to be over for the time being at least, as it struggles with a number of headwinds which include the property sector, debt levels, and an ageing workforce.
After ChatGPT burst onto the scene at the end of 2022, we have so far seen little real-world impact from AI. However, AI models are continuing to advance, and we may see the pace of real-world technology change increase.
Thank you for your support in 2024. It's been encouraging to see investors being rewarded after a disappointing 2022, with decent returns in 2023 and now double-digit returns in 2024. This is an important reminder that successful investing is not about chasing returns or reacting to short-term market events, but trusting the process, as markets tend to reward disciplined, patient investors.
We're here to help, so please reach out to Jim or I if you have any questions or we can assist in any way. We wish you and your family a happy Christmas and a prosperous New Year.